Hello and welcome to our weekly market roundup, your one-stop source for the latest in global market trends, key economic insights, and top financial news. I'm your host Daniel, bringing you the highlights and the happenings from around the world. Let's dive into the numbers and stories that moved the markets last week. So what happened in the market last week? Let's take a closer look. The major global stock indices showed strong performances last week, except for the Chinese market. The NASDAQ and the S&P 500 reached new record levels with weekly returns of 3.5% and 2.0% respectively. The Dow also gained 0.27%, remaining slightly below its mid-May record. European markets rebounded as the Labour Party secured a decisive victory in the UK general election, ending 14 years of Conservative rule. In France, recent polls indicated that neither the far left nor the far right would secure an absolute majority in the French Parliament, easing political uncertainty and boosting investor confidence. Japanese stock markets rose, with the Nikkei 225 gaining 3.36% and the Topix up 2.65%, driven by the yen's weakness. Chinese equities fell due to disappointing manufacturing data. The Japanese yen continued to weaken to reach 38-year low at 161.62. The GBP strengthened as the election results was perceived to clear up political uncertainty in the UK versus the continent. The euro also strengthened following Christine Lagarde's hawkish comments. Oil prices continued to rise, with WTI crude gaining 2.16% to close at 81.31, driven by supply constraints and rising demand expectations. Gold prices saw a significant increase of 225% as investors sought safe haven assets amid economic uncertainties. The latest jobs report showed a gain of 206,000 jobs in June, higher than the forecasted 190,000, but the unemployment rate rose to 4.1%, the highest since November 2021. Revisions to April and May's figures indicated a downward adjustment, highlighting a modest slowdown in job growth. Manufacturing and construction activities showed signs of contraction, with the ISM Manufacturing Index hitting its lowest level since February and the Services Sector Index dropping sharply into contraction territory. Powell's comments and the week's economic data drove a decline in long-term U.S. Treasury yields over the week. European markets were influenced by political shifts as the Labour Party won the UK general election and the far-right National Rally led the first round of French elections. ECB President Christine Lagarde struck a cautious tone on inflation, emphasizing uncertainties about future price dynamics. Economic data showed mixed signals, with a decline in German manufacturing orders and French industrial output, while Eurozone inflation ticked lower. Data indicated a 5.1% increase in wages, the highest in over 30 years, and consumer spending contracted unexpectedly. The yield on Japan's 10-year government bonds climbed to 1.1% before easing. The official PMI for manufacturing remained at 49.5, indicating contraction, while the non-manufacturing PMI also showed slower growth. The Caixin survey indicated some resilience in the manufacturing sector, but also highlighted a slowdown in services. The ongoing property downturn continued to weigh on economic sentiment. What to watch this week? As we enter the second week of July, investors should prepare for several key economic data releases and events that could influence market sentiment and drive volatility. Additionally, political developments in Europe and the kickoff of the earnings season in the US will be crucial. Here's what to keep an eye on. That's a wrap for this week's Market Roundup. Thanks for tuning in. Be sure to subscribe and hit the bell icon to stay updated with the latest market news and analysis. Until next time, stay informed and stay ahead. I'm Daniel, and I'll see you next week.